Yeah, I think the timing was very inelegant, to say the least. We're facing an issue right now where gasoline prices are kind of lofty because of refinery issues. And refiners, particularly in the United States, are going to be running 1 million to 1.5 million barrels a day more crude oil in the next 40 days or so. I would have suspected that if the administration was really gaming this out, that they might have turned the screws closer to the fourth quarter, when perhaps as much as 1 million barrels a day more crude is going to be coming out of West Texas via the pipelines that'll be in service then. So I think we're surprised by this, and quite frankly, I think the trade was expecting that perhaps we might get a cut of 400,000 barrels a day with some partial waivers, but nothing like zero tolerance.
I mean, it's not like crude oil prices are exploding on this news. They're up 2.5%, Tom. Yeah, I get your point that they've already been rising pretty much all year. But the fact that Pompeo suggested they have guarantees from Saudi Arabia and others to fill the void, doesn't that stand to reason?
I take the Secretary of State at his word, but the idea of what's a proper price for Saudi Arabia or the United Arab Emirates and what's a sort of reasonable price for the West and the United States, they could be dramatically different. Saudi Arabia is going to have that $1 trillion to $2 trillion initial public offering in the next couple of years, and we know that to balance their budget, they need a lot higher price. So I think what happened on Easter Sunday was the Secretary of State unwillfully basically said, it is not safe to be short in this market. And when you're talking a market where futures trade 50 or 60 times the physical oil, I think you've got some problems.
Tom, talk us through who the big importers of Iranian oil are, what their reaction is so far or is likely to be, and whether it's actually quite easy for them to get around this, particularly if they're not necessarily a close ally of the U.S.
Well, I think you pinpointed it before, or your correspondent did when they talked about China. And I think China is the key here. This doesn't help the relationship between the United States and China on trade. And China had been stockpiling some oil. They'd been buying U.S. oil, but they probably have a preference for medium or heavy crude, which Iran produces more of than, let's say, the United States. So I think geopolitically, this is a real challenge for the Trump administration. And then the second thing is, in terms of politics, we now have the intersection between politics and the price of gasoline. There's probably a half dozen states that the president needs to carry in the next election, which are going to go above $3 a gallon in this driving season. And up until now, it's been mostly blue states.